Understanding how credit cards work can seem like unraveling a complex puzzle, but it's actually a fascinating journey into the world of finance that impacts nearly everyone in today's digital economy. Whether you're making your first purchase with a shiny new card or you're a seasoned cardholder, grasping the intricacies of credit cards can empower you and enhance your financial literacy. Let's dive deep into the world of credit cards, exploring their mechanics, benefits, risks, and how they fit into the broader financial landscape. But when you swipe, tap, or enter your credit card details online, you are not just making a simple transaction. You are engaging in a sophisticated financial process that spans across various entities, including merchants, credit card networks, and banks. At its core, a credit card offers you a line of credit, a pre-approved loan, which you can use to make purchases or withdraw cash. What makes credit cards particularly interesting is that they operate on a buy now, pay later principle. This is fundamentally different from debit cards, which withdraw money directly from your bank account. To start with, when you decide to apply for a credit card, the issuer, usually a bank, reviews your credit history to assess your creditworthiness. This evaluation helps the issuer decide whether to extend credit to you and on what terms, including your credit limit and interest rate. Once approved, you receive your credit card with a specific credit limit, which is the maximum amount you can spend using the card. Each time you use your credit card, the available credit is reduced by the amount of that transaction. When you make a purchase, the merchant sends the transaction details through their bank to the credit card network, such as Visa, MasterCard, or American Express. The network ensures that you have enough credit available and then forwards the transaction to your card issuer for authorization. Once approved, the transaction is completed, and the merchant gets paid by the network. All these steps happen in just a few seconds, illustrating the efficiency and complexity of the back-end processes. At the end of each billing cycle, the card issuer sends you a statement listing all transactions made with the card, the total amount you owe, the minimum payment due, and the payment due date. You have the option to pay the full amount, pay more than the minimum, or just the minimum. Paying only the minimum is tempting, as it keeps more money in your pocket in the short term. But it also means you'll start accruing interest on the remaining balance. Interest rates on credit cards are typically higher than those of personal loans, making it essential to understand how compound interest works. If you don't pay your balance in full, interest is calculated on the total amount owed, not just on the remaining balance after your minimum payment. Over time, if you only make minimum payments, the compounded interest can lead to an escalating debt that might seem impossible to manage. Credit cards also offer various benefits, such as rewards programs, cashback, travel perks, and purchase protection, which incentivize consumers to use their credit card rather than other forms of payment. These perks are not just marketing tools. They can be genuinely valuable if used wisely. For instance, accumulating points on purchases that can be redeemed for flights or hotel stays can save you considerable amounts of money. However, it's crucial to weigh these benefits against potential drawbacks, like high interest rates and the temptation to overspend because of the availability of credit. Moreover, credit card security is paramount in our digital age. Advanced technology such as EMV chips in cards, secure online payment gateways, and real-time fraud monitoring help protect users from unauthorized transactions and identity theft. However, users must also be vigilant, ensuring that they safeguard their card details and report any suspicious activity promptly. Understanding credit cards also involves recognizing their role in building or damaging your credit score, a critical factor in your financial health. Regular, responsible use of a credit card can help build your credit score, making it easier to obtain loans, mortgages, and other financial products at better interest rates. Conversely, missing payments, maxing out credit cards, or applying for too many cards can hurt your credit score. As we've journeyed through the life cycle of a credit card transaction and its broader implications, it's clear that credit cards are a powerful financial tool with the potential to both enhance and complicate our financial lives. By understanding how credit cards work, you are better equipped to use them wisely, reaping the benefits while avoiding common pitfalls. Like any financial tool, the key to using credit cards effectively lies in informed and disciplined use, ensuring they are a boon, not a burden, to your financial journey. In the vast ocean of personal finance, credit cards represent both a peak and a potential pitfall. By mastering their use, you can navigate through financial challenges more effectively, maximizing benefits while minimizing costs. Now that you understand the workings behind that small piece of plastic, you're equipped not only to use it wisely, but also to make strategic choices that align with your long-term financial goals.